Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 22nd day of August 2017, and this is the Daily Report for Gold and Silver. Moderate downside pressure in the precious metals markets is a direct result of a strong dollar today. Gold trading off by about $6.40. Basis most active December's futures contract closing at $12.90, low $12.87. That low is critically important, and we'll discuss that as we pull up our technical studies. Silver, more of the same, in essence unchanged, closing down about 3 cents, but breaking below $17 an ounce to close at $16.98. As I said, today's downside move in precious metals is a direct result of the strength in the US dollar, gaining about 0.4%, closing at 93.42, and a significant upside move in US equities, 196-point gain in the Dow, 21,899, 84-point gain in the NASDAQ, 62.97, and 24.52, a 24-point gain in the Standard & Poor's. After trading to a 3-month high, gold is certainly trading under pressure today, although the pressure today is really dollar strength more than selling in the market, but nonetheless, it is trading lower, currently at $12.90 and 70 cents, down $6 on the day, about 0.5% drawdown. Now, what's important to me and to us, I should say, is the low, because we currently have an active trade in which we're long at around $12.82, and we do have stops at $12.85. Let me draw an arrow across. And the rationale behind putting our stops behind this particular price point is recent lows. And I went back basically 3 days and looked at the lowest low that we had, this being Monday, Friday, Monday, and then today. On all 4 occasions, today's low was 86, but on all occasions, we had roughly this low come in. And so what that tells me is that this particular price point should, in fact, be a current level of support. However, we are also very close to our stop with that low at 87 today. We will absolutely have to see if this stop holds. We are still about $6 away from there. And with events in the market, we could see some choppiness as we go into Jackson Hole, and the wild card being rhetoric coming out of North Korea and some pretty strong threats that were levied today against the United States, but North Korea has made these types of threats in the past. The question is whether or not they will act upon the current exercises going on in South Korea, between South Korea and the United States, or whether the only statements they make are statements that are not acted upon. As I said, that is a direct wild card that is in the market. Now, as I said, it has been dollar strength that has really been responsible for today's decline in gold prices. We are looking at a daily dollar index chart. We can see that it opened very, very close to yesterday's close and is now trading above yesterday's open. That would be the top of this red bar, trading at 93.45. Now, this, of course, is a daily chart. I'm going to convert it into a weekly chart so we can look at some of the long-term resistance levels. And as you can see, I do have a double fib retracement in here. We're going to concentrate on the longer retracement starting at 78, 79, going up to these tops at 104. I do have a secondary fib retracement that simply accounts for this area here at around 91, going up to these record tops. And that would be used should the market find some support and begin to move back up to plot various levels of resistance. However, I still believe that there is a distinct possibility that this market will continue to trade under pressure, and I believe it could trade, as I've said, as low as 92, and my sense is 91.84, which is where I've highlighted these bottoms here, and is also a 50% retracement of this entire move here, I think that that is a logical place that the dollar index could go. So traders, I'm not thinking that we have found support, although it is quite plausible with this rounding and congestion area that we are currently in, especially when you consider that this is a weekly chart. So we are looking at activity over the last month or so. My recommendation, therefore, with our current long gold position is to maintain our current long gold and to maintain our current stop level. And traders, there is certainly another market which has been putting some bearish outside market influence on the precious metals markets, and that is this renewed risk-on environment that we saw today in U.S. equities. U.S. equities having a tremendous gain. Dow Jones Industrial closing up about a full percentage, almost 200 points. When we look at our daily chart, which is what I've got up on the board, we can see that although today's upside move does not equal the downside move we witnessed last week, it is nonetheless A, substantial, and B, a very, very good sign that we have seen a potential recouping in this particular market. Not only that, when we look at the NASDAQ, we have a very, very similar scenario. Upside move, 1.3% in terms of the gain. And again, the move does not totally alleviate the downside activity of last week, but it's certainly a very good start. Of course, I think that a lot of our traders will recognize this particular pattern is a variation off a three-river morning star. Mostly it's a variation because you have these double stars at the bottom. And then lastly, of course, is the Standard & Poor's, and a very, very similar chart formation there. Double stars, long red candle down, long green candle up. It's certainly a variation off of a three-river morning star. Traders, as we talked about during the technical study section of today's show, we do have a stop sitting below 1285. We're in roughly at 1282, and the market's trading at 1290. So we're only about $5 away from our stop. I am hoping that our stop does hold. If it does not, it pushes us out at roughly a push to a very, very small profit, but not a loss on the trade. And that to me is my primary function, is to control equity drawdowns and consistently look to have gains in the marketplace itself. We do have some very important, significant events that are coming up this week and next. We have Jackson Hole on Thursday. We also have the current war games going on. That's a joint military exercise between South Korea and the United States, and new significant threats today by North Korea saying that they will turn the United States into a pile of ashes. Will they act upon it? Personally, I don't think so. But nonetheless, the rhetoric vehicle has once again ramped up. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.